Hey guys, welcome back to week 7 for the trading watch list. And this week is going to be a little bit of a wait and hold kind of a week. This watch list is applicable for August 14 to August 18. If this is your first time on the channel, I highly recommend that you subscribe to the channel and follow this watch list because every single week I go over potential trade ideas for the week. In today's video, we will do the recap from the last week's trade, which was on Intel, Tesla, and AMD. And I will give you another couple trade ideas for the upcoming week. So if you end up enjoying today's video, make sure you hit the like because it will help the YouTube push these videos out to more people. Also follow me on Twitter because I post all my trade updates over there, and I also have a newsletter, so make sure you subscribe to the newsletter as well to get more details on each trade. So without further ado, let's dive in. Kicking it off with our last week's performance, we had a slew of selling across the technology sector. As you can see, Microsoft, Meta, Apple, Nvidia, everybody had a major loss, including Amazon, Tesla. They were all down. The only green sectors that we see here are in the energy and the healthcare technology. Next week, the FOMC meeting minutes will be released on August 16 at 2 p.m. Keep an eye on the market at that time because market does react violently, especially after the minutes. Another metric that I highly recommend that you should keep looking at it on a regular basis is the fear and greed index. It kind of gives you a very good picture on how the market is feeling right now. Last week we were in greed at 69, we have dropped to 66. A month ago we were in extreme greed at 78. This does not mean that the market will behave what the greed index tells us. However, it is a good gauge on how the market is feeling from a sentiment standpoint. I have done a video on fear and greed index and I'll put the link in the description, so definitely check that out. Next week is going to be pretty light on the earnings standpoint. I don't see much happening next week. We do have some big names like Home Depot, Target, Walmart reporting earnings. We also have TJ Maxx, we have John Deere. So these are more dividend plays. Last week we had 3 tickers for the trade: Tesla, AMD, and Intel. I did not take the Intel trade because the premiums were not worth the trade. The second was running a covered call on Tesla, and as you can see, we ran a covered call on August 11th expiration for $153. And at this point of time, my adjusted cost basis for Tesla is $255.63. If you remember, we had purchased the stock at $265. We initially had $243 in the cash secured put premium. Then we gained $479. The week after, we gained another $62 for the covered call of the week. And last week, we got a covered call premium for $153 and $32. Stock is trading around the $242. So that's about almost 7.64% down. So next week, if we sell a covered call at $255, we'll get about a premium of $143 to $148. The delta would be around 0.2, so the chances of it being assigned is highly unlikely unless we see a bounce next week and stock can go back to its 20-day EMA at 268 and 22. So that is what we are going to be watching next week. The candle setup for Tesla is very interesting. We had this doji candle here which represents indecision in the market. The hammer candle denotes that there could be a reversal in the pattern. What we would like to see a bounce to get to the EMA of 50 of 248.99. That's our first level, and the second level would be our EMA 20, which would be 256. I would be closely tracking the price of Tesla next week and see if I can open a covered call with some substantial premium. Next, we opened an AMD trade. We opened a cash secured put at $105 for AMD and we got about $94. Our cost basis will be around the $104 and few cents. Currently, AMD is down below its 20-day and 50-day EMA as well. RSI is heading downwards at 41 and we do have the MACD pointing downwards as well. Now for our trade, if the AMD stock price does not go below 105 or below, that trade will still be 100% profit. If it goes below 105, we will end up buying the stock at 105 with a cost basis of $104. After the trade wraps up, we will sell that as a covered call as part of the wheel strategy. Next week is going to be a wait and watch to see how things are playing out in the market. Are we going to continue to see declines, or we do get some kind of a bounce back? And because of that, I will only be focusing on one trade for next week, which will be Square. The company's block ticker symbol is SQ. I discussed the technical analysis of Square with my friends Nate and Sean on the trading triangle, and here's the clip from that session. Yes, I have the last one, and this could be a trade setup. So this is Square. And I'm kind of started liking Square at these levels. Because 58 was their all-time low for a while, then it hit the 51 and then it bounced back up. But a couple of important points for them is that number one is they have had their EPS and revenue beat recently, and they have had that for a long time. The drop that we saw this massive drop. Last week we talked about the PayPal effect, but I think when you deep dive into their earnings report further, what we saw was that it is also the slow growth of the company itself. The Cash App is the most important aspect of Square at the current point in time. That is growing at a very good level. The problem between Square and PayPal, Square is not a profitable company yet. PayPal is, and still PayPal is, getting pretty beat up. I know
Yeah,
we didn't cover PayPal this week.
it really is getting beat up though.
Exactly. The put to call on this one is 0.62. You have more call options. Again, with fintech stocks, what ends up happening is it's a fan favorite, it's a retail favorite. Whether you take Square, PayPal, SoFi, Upstart, it's just like a lot of retail investors like fintech. But what I'm really liking with this chart right now is my levels at about 59.61. That is the level that I'm targeting for a bounce. If that doesn't happen, I have both trading and I do long-term investment on Square. So those are my levels where I will tend to add to my position while also opening cash secured puts and trying to do a trade on a weekly or a bi-weekly basis on Square.
That I'm not the only one who calls this Square still. So I don't know anybody who refers to this stock as block, but I didn't hear you say block once, Kaye, and it made me feel good. So, and I think we are right at that. I agree with you. 59.61, nice support level. Look for a bounce there. It looks like it's not fully respected it, so it might get a little bit lower, pushing to the 59, 58.50 or somewhere around there. But as long as you get a snapback and show some support there, that could be a nice entry for, as you mentioned, longer term. In the shorter term, it's tougher because we are below all those moving averages, and so that makes it a little tougher trade. Would you agree, Sean?
Yeah, I think the higher low would be nice to see. So if it goes anywhere basically above 57, I think that would be good. I think for the long term investors, but anything below that, I think trouble. But
It'll be tough. Yeah. Good call.
Now, as you saw on the clip, I am focusing on the 59 and 61 level, especially from my long-term portfolio where I can add that. Now, as you heard from the panelists, 59 may or may not be respected, and that is going to be our checkpoint to see if we get a bounce from 59.61. And if that is the case, I may be looking to opening a cash secured put at 59 or maybe even at 60, depending upon the premium and the expiration date. So if you don't want to miss out when I place that trade, make sure you follow me on Twitter. And if you enjoyed today's video, make sure you hit the like, click on subscribe and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.